By 2026, the conflict consuming Silicon Valley has moved beyond code. This war is no longer fought with software updates, but with physical assets. The front lines are now defined by thousands of heavy GPUs, miles of raw concrete, and sprawling data centers that anchor the cloud in the physical world. This chart tracks the accumulation of capital in the AI sector. Between 2020 and mid-2026, big tech poured over $1.5 trillion into building this heavy infrastructure. Silicon Valley companies are mutating into heavy industrial titans, moving away from their roots as lean software providers. They are now locked in a high-stakes arms race where survival is tied to the scale of their physical build-out. This highlights the acceleration of the race. In 2026 alone, spending jumped to $725 billion, a 77% increase. Amazon accounts for roughly $200 billion of that total. Google follows with up to $185 billion, while Meta projects a spend of $135 billion. NVIDIA CEO Jensen Huang expects this acceleration to continue. By the end of this decade, he estimates global AI infrastructure spending will reach between $3 and $4 trillion. With capital expenditures reaching these levels, the margin for error narrows. The scale of the investment requires massive market capture to remain viable, creating a scenario where finishing second might not generate enough revenue to offset the initial cost. OpenAI is the current frontrunner in this race. Their lead is built on the rapid adoption of their models across the corporate world. That corporate footprint is extensive. Today, OpenAI alone accounts for roughly 45% of Microsoft's entire cloud backlog. To maintain its lead, OpenAI initiated Project Stargate. This $500 billion data center network represents the largest private infrastructure investment in history. Funding a project of this size required moving beyond traditional venture capital financial weight of the build. The strategy relies on maintaining an insurmountable speed advantage by outspending every competitor. However, this pace leaves OpenAI highly exposed if their momentum begins to slow. Google is pursuing a strategy of total ubiquity. Their focus is the integration of Gemini across their existing digital services. By weaving AI into Search, Gmail, and Android, they are pushing Gemini into tools billions of people already use, driving higher engagement across their ecosystem. This map illustrates Google's distinct vulnerability. They are fighting a two-front war. On one side, Google Cloud battles AWS and Azure for enterprise dominance. On the other, their consumer models face direct competition from OpenAI and Meta. Google's existing empire provides unmatched reach, but it also creates an enormous surface area to defend. The company is forced to deploy its capital defensively, guarding every flank at once. Then there is Meta, the combatant that initially lost the most ground in the race for AI valuation. To force a correction, Mark Zuckerberg executed a $14.3 billion deal to bring in Scale AI's Alexandr Wang, placing him at the head of a new unit, Meta Superintelligence Labs. 9 months later, the structural overhaul yielded immediate results with the launch of their new model, MuseSpark. Meta's true counteroffensive relies on distribution. By releasing the Llama model family as open source, they allow researchers and rival companies worldwide to build on the technology for free. This is a scorched earth tactic. If Meta cannot dominate the walled gardens of their competitors, they will use the open source community to circumvent those walls entirely. Beyond corporate rivalries, all three companies face an inescapable bottleneck. The ultimate enemy in this war is electricity. A single modern AI data campus consumes up to a gigawatt of power, the equivalent energy draw of an entire small city. The existing grid cannot handle the demand. To secure enough power for its data center in Louisiana, Meta struck a deal to connect the facility directly to a local nuclear power plant. The pace of AI development is no longer dictated by software architecture alone. It is strictly constrained by the physical laws of thermodynamics and the Earth's raw resources. Observing the scale of this physical extraction, some analysts are asking if the entire conflict is built on a beautifully engineered illusion. This diagram highlights the central financial anxiety. On one side sits a $725 billion annual spend. On the other, a drastically smaller fraction representing the currently visible revenue generated by AI. Proponents point to tangible returns, such as Azure's cloud growth and improvements in Meta's ad targeting. But the question remains whether these gains can service such towering infrastructure debt. This discrepancy creates a binary outlook. Either the giants are correctly anticipating a permanent shift in global productivity, or they are currently building a financial bubble with no historical equivalent in size. The board is set. OpenAI is sprinting on speed, Google is fighting for ubiquity, and Meta fuels an open-source rebellion. The collateral damage from this conflict will not stay confined to Silicon Valley. The immense physical demands of these systems will directly stress global energy grids and cause significant disruption to the international job market. While the ultimate winner of the trillion-dollar war is still undecided, the scale of the bets ensures that human society will be irreversibly altered by the crossfire.